Hello, today is the 27th of January, and this is another market report, market review, if you wish. And yeah, today we have a very interesting day because it's a situation which I can call, which I like to call, media finally caught up with the tape. That means that during January was, and it still is a rather challenging month. Obviously, because we have new administration in the states, and we are back to this very news-driven environment where you wake up, you check the price, and then you try to guess which of the news is responsible for the change. Um, but what was really obvious in this market is that it is not very powerful, actually. A change in character was in the second half, at the beginning of the second half of December, when we had this sell-off in the Qs, and actually it still didn't recover from that sell-off. As you can see, when the price approached highs of that day, namely the 18th of December, this is what we see now. And the news behind the price action are very interesting also. And I think they could have a very deep and lasting influence on American economy. But what really happened is that Chinese uh, company, I don't know the name, unfortunately, don't remember the name, presented an open source large language model called DeepSeek, and it seems to be on par or even outperforming ChatGPT in some areas. And the most important part about that is that everything, all this was done under sanctions because these guys, they don't have access to modern NVIDIA GPUs, and and what's even more important probably is that they claim that they have invested only $6 million in the development of this model, which is of course incomprehensibly small when you compare it to what OpenAI, for example, or basically any other startup in company or startup in this space wants to get in order to develop models. Of course, they were building on the foundation which was created by OpenAI, but nevertheless, the magnitude of the amounts of money they claim to be using is quite different. And that points out one very important thing about this situation, namely effectiveness. If it turns out to be true, and don't forget that you gotta take with a grain of salt everything that Chinese companies or regulators or statistical data providers claim. If it turns out to be true, the main problem is that OpenAI turns out to be incredibly inefficient. And since the main narrative of the new American administration is about efficiency, um, for example, this Doge agency, but the criticism of inefficiency was mainly pointed at the government sector, but not the corporate world. And this piece of news is like a slap, and and an insult to the corporate world, uh, guys from which claim to be far more efficient than the government and want to reform it and optimize it. So also when you think about economy and even liquidity in the markets, you should understand that to a large extent, this whole configuration of liquidity flow in the market was maybe was built around Nvidia, and lots of institutions, lots of companies, lots of people still hold large amounts of Nvidia. And here we saw character change as well. Even earlier in November, we saw this stalling, and on the 7th of January, we saw this massive distribution. So this is at the very least, it is an event which will prompt reconfiguration of liquidity flows in the market, and that means a very increased volatility, perhaps for a prolonged time. As we can see, VIX is elevated today, retreating now, but nevertheless above all moving averages, and we still need to figure out how the markets will close today. But this is really serious. This is an event of high magnitude here. What's interesting to point out as well is that MDY and IWM are holding. They are basically ignoring what's happening in the indices and in the mega caps. That's an interesting development, and I could imagine that maybe they are being a bit overlooked by the market now, because everything is all the action is in the mega caps, but they could also be discounting potential benefits which the development in the open source large language models are about to deliver to them, because small companies is the space where people think about effectiveness first. They don't usually they do not have this amount of fat and the industry position which mega caps, especially mega caps which get more and more entangled with the state these days have. So maybe this space of small companies is strong today because they will see this productivity boost from another breakthrough in the space of AI development. We'll see. Also, their resilience could be a good sign, because we are about to see another decision by the Federal Reserve on Wednesday, and maybe resilience in these kind of names points us to a better outcome in that decision. Maybe the market thinks that there will be no hike, which is not very likely to happen anyway, and maybe there will be not too hawkish. The rhetoric from the Federal Reserve will be not that hawkish, to scary market too much. But my in practical terms, everything that I told you means that the market is about to be untradeable from the long side for a while, as I can see it, maybe for a week at the very least. And in my own practice, I've met this event in cash, obviously, because I did a couple of trades in this market, and very quickly I got this feedback that the market is not very accommodative, so I turned to defensive positioning at this moment. That means cash, and the decision was mainly driven by the price action, of course, and the feedback from positions which I tried to put on. starting in January. But from the fundamental standpoint, my main concern was this upcoming Federal Reserve meeting, because as I've said, even before the new Trump administration started generating this news flow about acquiring Greenland or deporting immigrants or applying tariffs to imports to the states. Even before that, and all of these measures are very, very inflationary. We had conflicting data at in the middle of December, I think, which in turn spurred this sell-off. And when you couple that with this new political-driven news flow, I think it could be very, very inflationary, and I expect it to be reflected in the rhetoric. Obviously, MDY and IWM, which we have seen, which we IWM is on the screen now. They do not confirm this. There is no weakness in them, and maybe it will not be the case. I mean, this more hawkish rhetoric, but it still could happen. There could be other reasons for this resilience in these ETFs, in these indices today. So, in case we have a negative surprise from the Federal Reserve at Wednesday, and if you couple that with today's news from the Chinese competitors of OpenAI, I think it could very well trigger a very significant correction in this market, and it could be quite rapid, because also when you take these two factors into account, you should also consider a general factor of reality check. That means that the euphoria from the election and from the fact that American system still works well and the transit of power was effective and was not accompanied by any sort of political crisis and struggle, that was already discounted. What comes next is so-called reality check, if you want. That means that you gotta start assessing the economic impact of ambitious projects which this administration wants to carry out. And that could be a bit concerning, because obviously this government is a government of reform, and when reforms are being carried out, this is also acceptance of a fact that the system doesn't work that well, so it needs to be reformed, so it needs to be optimized. And this is a point of fragility historically and economically, in both in economic space and in the space of politics. It could be a very, very volatile period. So I think this factor also is reflected in the markets now, or will be reflected maybe during this week. So in stocks, I'm good, because I have been in cash, mostly in cash, during this year. And where I got scratched is the crypto space, because here is my position, my experimental position in my leverage strategy in Bitcoin. And here you can see that it was triggered today. It was liquidated. So I took a hit in this one. Obviously, it's an experimental account, and it is up quite a bit, but nevertheless, a significant portion of it was hit. So I think that the next step here is to increase expectancy, because obviously here, what's the right description of this situation is that all of these trades, all of these successful trades, were basically bailed out by the market, and in some of them, in most of them, the downside is bigger than the upside. So on one hand, it allowed them to sit through this volatility, for example, here, 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 and even here. But when it went down, obviously because it is leveraged, it takes quite a bit of damage. So that account is still up quite a bit, and I'll use this time to think about what to do, because obviously it's not so easy actually to consider that. By the way, this situation almost got itself liquidated, but it survived by the very, very thin margin. The most obvious solution here would be to cut the downside and make trading short term. But at the same time, that means you will have to put out more trades, get stop losses quite often, and that opens a scenario of a death by 1,000 cuts. So this is the problem I want to research, I want to think about, and find a solution. So basically, this time is a time of research. The whole January, to a large extent, was a time of research and finding new ways of navigating this market. And for me personally, I think that I'm sure that I'll change my approach quite a bit. What I want to do during this year is to introduce not only long trades in growth stocks or whatever assets, but also short trades. Why? Because we got to make money in both markets, in the markets which go up and in the markets which go down. And protecting money obviously is just not enough. So this is the first goal for this year. And the second goal is to maybe solve a problem which is presented in this chart, which is cutting the downside volatility and allowing the upside volatility to play out while also having leverage, and that means options. This is another goal for me for this year. And also, if I decide to take a higher look on this January, I want to finally let the macroeconomic analysis to be a factor in my trading, to make a bit more of a discretionary trading, if you wish, because despite the fact that this sell-off was triggered by news from China, I was quite bearish during the second half of January. Why? Because of the reasons that I've mentioned above earlier in this video. So why not to try to play it? Why not to create an option expression for this trade and see what happens? So I'll be exploring opportunities like this. Obviously, very interesting start of the year. And yeah, I think that's all. Let's be in touch.